There is a silent gap that destroys more trading accounts than any chart pattern, indicator, or bad entry ever could, and most traders never realize they've fallen into it until the damage is done. Before we dive into markets, I want you to pause for a moment and ask yourself a simple question. If your strategy is good, why isn't your account growing? I want to see how many traders recognize this in themselves. Because after years of watching traders succeed, fail, rise, fall, disappear, or rise again, I learned something the hard way. The difference between a trader who survives and a trader who slowly bleeds out is not knowledge. It is discipline, and not the type of discipline that people casually brag about. I'm talking about the kind of discipline that feels like a battle against yourself, a fight against impulses, fear, ego, boredom, and the quiet, corrosive voice inside telling you to just take one more trade. Let me tell you this plainly. Most traders do not lose because they lack skill. They lose because they lack control. I've watched traders build strategies that were genuinely profitable, but they couldn't follow them. I've watched traders take months to create a trading plan and break it in 20 minutes. I've watched traders size responsibly for 10 trades straight only to double their size on the 11th and wipe out all progress. This is the discipline gap. It's invisible until it destroys everything. Jesse Livermore understood this better than anyone. He once said, "It is not the market that beats the man. It is the man that beats himself." Every time I revisit that quote, it hits harder. Livermore wasn't talking about signals or timing or chart formations. He was talking about the internal war, the one you fight alone when the candles move and your heart starts racing. You see, discipline is not something you claim. It's something you demonstrate 1,000 small decisions, day after day, when nobody is watching. And that brings us here, to this video. Because today, I'm not just explaining discipline. I'm exposing why traders cannot grow their accounts, even when everything else is working. The flaw is deeper than strategy, deeper than psychology, deeper than self-help slogans. It comes from something structural, something fundamental, something every trader must confront if they ever want to become consistent. In this opening section, my goal is simple: to make you realize that discipline isn't a virtue. It's the foundation your entire trading career stands on. You see, traders don't struggle because they lack information. The internet is overflowing with strategies, indicators, tutorials, courses, gurus, and thousands of opinions. No, the problem is not a lack of knowledge. The real problem is an internal contradiction. Traders want certainty inside a game built on uncertainty. They want control inside a world they cannot control. They want freedom, but they keep choosing behaviors that imprison them. This is the inner conflict. This is the discipline gap. Let me explain how this paradox truly works. When traders sit isolated with a blank chart, they believe they are rational. They think they are making decisions based on logic, analysis, confirmation, and structure. But the moment the market opens, the moment candles begin to move, the moment money begins to fluctuate, something else takes over. A trader becomes two people: the person they want to be and the person they are. The person they want to be is calm, patient, disciplined, a hunter waiting for the right opportunity. The person they are is terrified of missing out, desperate to be right, eager to avoid pain, and seduced by the illusion of quick gains. And the market knows this. It feeds on it. Every candle tests your discipline. Every fake breakout tests your commitment. Every pullback tests your patience. Every loss tests your emotional strength. Every win tests your ability to remain humble. Most traders don't fail because their strategy is bad. They fail because their internal self sabotages the system. Jesse Livermore used to say, "A man must believe in himself and his judgment if he expects to make a living." But belief isn't confidence. It's consistency. Belief is demonstrated through action, not emotion. Livermore understood something that most traders ignore. The market doesn't have to defeat you. It simply waits for you to defeat yourself. And most traders willingly do. This is why discipline feels so impossible. It's not about the chart. It's not about the setup. It's about the internal battle between impulse and intention, and impulse usually wins. But we need to go deeper. We need to reveal the psychological trap that makes discipline collapse in the first place, even for smart, experienced traders. Long before the modern trader existed, Charles Dow already warned us. The market is a mirror, and it reflects your discipline with painful accuracy. I want to take you into the mindset of the man who built the foundation of market behavior, Charles Dow. And here's what most traders never realize. Dow wasn't just analyzing price. He was analyzing human behavior in price. His entire theory is built on one brutal truth. The market rewards disciplined minds and punishes emotional ones every single day. Let me show you how deeply Dow understood the discipline gap. 1. The market moves in trends, but traders move in impulses. Dow believed that the market reveals itself through trend structure primary, secondary, and minor movements. These trends unfold slowly, logically, and with purpose. But traders? They behave in jolts, reactions, and emotional swings. The market is consistent. The trader is inconsistent. This mismatch is the birthplace of failure. This is why Dow insisted that success requires following trends with patience, not predicting noise, not chasing spikes, not reacting emotionally. Yet emotional traders do exactly the opposite. 2. Dow theory demands objectivity, but traders seek comfort. Dow taught that price action, not opinions, tells the truth. If the trend is up, you follow it. If the trend breaks, you step aside. But here's the conflict. Following the trend often means doing the emotionally uncomfortable thing. It means holding when you want to exit. It means waiting when you want to act. It means admitting a trend has died when your ego wants to hold on. Dow's framework exposes every undisciplined tendency in the trader. 3. The market is law, your feelings are noise. This is where Dow was ruthless. He believed the market does not bend to emotion, hope, or fear. It behaves according to structure, volume, trend confirmation, and price. Everything outside of that is irrelevant. That's why traders feel pain. They try to impose their feelings on a system that does not care. 4. Dow never expected traders to predict, only to obey. This is the part modern traders completely misunderstand. Dow never asked anyone to outsmart the market. He asked them to understand its language, and that language demands discipline. Not brilliance, not creativity, not emotional comfort. Discipline. Dow theory is a discipline framework disguised as technical analysis. It teaches you to wait, to observe, to follow, to stop forcing, to stop predicting, to stop fighting. When you view discipline through Tao's lens, everything becomes clear. The market isn't your enemy. Your lack of discipline is. The market only reveals it. And to truly understand how destructive this lack of discipline becomes, we must move into a story, a real moment, where traders collapse under pressure in exactly the way Tao predicted. Let me take you inside a moment, a single trading day where one small break in discipline destroyed 5 months of progress. I want you to imagine a trader. Let's call him Daniel. A normal trader, not a beginner, not an expert, just like most people watching this. He had a system, a plan, and the past 5 months had been good to him. Steady growth, small risks, disciplined entries, the kind of progress that makes you believe you finally cracked the code. On this particular morning, Daniel felt confident. He'd been consistent. He'd been disciplined. He'd been doing everything right. And that's the dangerous part. Discipline is strongest right before ego destroys it. The market opened quietly. Daniel took his first trade, a clean setup, part of his strategy. The trade went against him, slowly, grinding, dipping into his stop. And before the stop hit, he did what he never does. He moved it. Just a little. Just to give it room. Just this once. That tiny moment. That 1-second decision was the first crack. Tao would have called this the shift from logic to emotion. Livermore would have recognized it instantly as the trader surrendering to hope instead of discipline. And like every undisciplined moment in trading, that single choice invited the next bad choice. The trade hit the widened stop. Daniel felt frustration rise hot and immediate. Instead of stopping to breathe, analyze, or reset, he did what millions of traders do every day. He took another trade instantly. Revenge. Not strategy. Not calm reasoning. Just impulse. That trade lost 2, then another, and another. Within 2 hours, Daniel wasn't trading the market. He was trading his emotions. He increased size. He entered without confirmation. He stopped following every rule he'd spent months crafting. And by the end of the day, 5 months of profit were gone. All of it. Not because the system failed. Not because the market was cruel. But because a disciplined trader became an emotional one. And the market punished the shift immediately. When I spoke to Daniel later, he said something I will never forget. It didn't feel like I was trading. It felt like something else took over. I wasn't myself anymore. Every trader who has lived through this knows exactly what that means. This is not a story about money. It's a story about the moment discipline shatters. And how fast the market exposes the break. But this isn't the end of the story. Because every collapse has a deeper emotional bottom. A place traders don't talk about openly. Every trader has a moment when the screen goes blurry, the heart sinks, and the truth becomes impossible to escape. This is the moment discipline dies or is reborn. Let's return to Daniel, because his story didn't end with the losses. It continued into a place every trader eventually reaches: the emotional bottom. When the trading day ended, Daniel didn't close his platform immediately. He sat there frozen, watching the P and L, watching the red, watching the 5 months of growth evaporate like they were never real. He wasn't angry anymore. He wasn't panicking. He wasn't even frustrated. He was numb. That's the part of the story most traders hide. The quiet collapse that happens in silence after the chaos ends. Daniel told me he felt a strange emptiness, not because of the money lost, but because of what the loss represented. He said, "It felt like I wasn't the trader I thought I was." And that is the real low point. Because losses hurt, but broken self-belief hurts far more. This is the moment when traders ask the questions they fear most. Why did I do that? What's wrong with me? Why can't I stay disciplined? Am I even built for this? Why do I keep repeating the same mistakes? It's the moment you realize that the enemy wasn't the market. It was your inability to control yourself. This is the psychological breaking point. The point where traders either quit or awaken. Jesse Livermore faced these emotional bottoms constantly. Even at the peak of his fame and wealth, he wrote, "After a loss, I feel humiliated, not by the market, but by my own lack of discipline." Imagine that. A man who made and lost fortunes larger than entire economies was most hurt by his own behavior, not the numbers. And that's when something critical happens. The turning point begins not when the losses stop, but when the truth becomes undeniable. Daniel's turning point came when he printed his entire trading journal, 5 months of progress, and held it in his hands. He realized something painful but liberating. He wasn't unlucky. He wasn't cursed. He wasn't close to success. He was undisciplined. And the market simply revealed it. That is the moment every real trader must reach. The moment you stop blaming the system, the market, the volatility, and finally face the only variable that truly matters. You. But reaching that emotional low is not enough. To rise again, the trader must grasp the lesson Charles Dow built his entire theory upon. The breakthrough that separates disciplined traders from impulsive ones. Here is the quiet truth most traders never hear. You don't rise to the level of your strategy. You fall to the level of your discipline. This is where Charles Dow, the man who decoded the market's behavior more than a century ago, gives us the rule that stops traders from destroying their own accounts. The market rewards those who behave like the market, consistent, unemotional, and structured. Let me repeat that. Consistent, unemotional, structured. 3 behaviors, and not a single one comes naturally to human beings. Dow understood something profound. The market is not a puzzle to be solved. It is a process to be respected. It moves in waves, cycles, sequences. And those sequences do not bend just because you feel confident or afraid or impatient. A trader without discipline is like a sailor trying to command the tide. The tide does not listen. The tide does not negotiate. The tide does not care. Dow built his entire philosophy on one law. Trends exist because human nature does not change. And if human nature does not change, then you, the trader, have only one battlefield to master: your response to your own impulses. This is where most traders fail, not because they don't understand charts, but because they don't understand themselves. Dow warned repeatedly about a pattern he called impulsive interference. The tendency for traders to step into a perfectly stable trend and destroy their own position by acting emotionally. He wrote that the market punishes noise, but rewards patience. It destroys the undisciplined, but magnifies those who can follow rules even when emotions scream otherwise. So here's the breakthrough rule. Simple on paper, brutal in execution. Never act on the temptation of the moment. Act only on the plan built before the market opened. Because your plan is written by logic. Your plan is written when nothing is on the line. Your plan is written without fear. But your impulse is written by a version of you that should never have access to your account. Jesse Livermore followed this rule obsessively. He said, "A trader must enforce discipline on himself. The market will not do it for him." And that line, despite being more than a century old, is the foundation of modern profitable trading. If you remove discipline, your strategy collapses. If you enforce discipline, even an average strategy can outperform 90% of traders. And here's the paradox. Discipline is not built in the market. It is built outside of it, in your preparation, in your rules, in your routine, in the promises you make to yourself and actually keep. This is the moment where traders either break their old identity or repeat the same losses for the next 10 years. Most traders don't lose to the market. They lose to the version of themselves that shows up when money is on the line. Today's markets move faster than anything Charles Dow or Jesse Livermore ever saw. But human psychology hasn't changed 1 inch. And that is why Dow's discipline principle is more relevant now than at any point in history. Let me explain how this rule plays out in the modern trading world. Modern traders are drowning in noise. Back in Dow's time, traders had limited information. They had a newspaper, some ticker tape, and intuition. Today, traders face something far more dangerous. Unlimited information. Unlimited distraction. Unlimited temptation. Every alert, every notification, every chart movement is an invitation to break discipline. Your phone becomes a weapon pointed at your account. Social media pushes fear into your mind. You see someone else posting their profits, and instantly, your discipline dissolves. Dow warned that price noise triggers emotional noise. Today, noise is everywhere. And that means discipline isn't an option. It's survival. Two modern traders want immediate results. The biggest psychological shift of this generation is impatience. People want gains now, confirmation now, progress now. This creates a destructive mindset. If the trade doesn't instantly go in your favor, you assume the plan is wrong, instead of assuming your patience is weak. Dow taught that the market moves in phases: accumulation, expansion, distribution. But modern traders, they want all 3 phases completed within the same hour. Your impatience is your biggest drawdown. 3 algorithms don't break discipline. Humans do. Today's markets are filled with bots, quants, automated systems. They have no emotions. They don't chase. They don't revenge trade. They don't break rules. They execute perfectly. And here's the painful truth. Many traders are not competing against professionals. They are competing against their own emotional mistakes. Discipline is the only human advantage left. 4 modern platforms make overtrading easy. 0 commissions, instant fills, infinite leverage. The platforms are designed to keep you active, not profitable. Dow warned that unnecessary activity kills accounts. Livermore said the same. Every great trader repeated this truth. But today, traders press buttons not because they see opportunity, but because they see availability. Your access to the market is not a reason to enter the market. 5 modern traders justify breaking rules. I'll break my rule just this once. I feel like the market might reverse. I'm sure this will bounce. This loss is small. I can recover it. Every broken rule is a crack in your discipline foundation. And, like a dam, it will burst eventually. Today's market doesn't punish a lack of intelligence. It punishes a lack of emotional control. And that is why the Tao discipline rule applies now more than ever. Your edge is not your system. Your edge is your behavior. Let me walk you through the exact step-by-step framework used by disciplined traders. The same structure inspired by Charles Doe's market logic, and refined through Jesse Livermore's hard-earned lessons. Read this slowly. Absorb it, because if you apply this, your entire trading life changes. STEP1 create a non-negotiable rulebook. This is the first brick in the discipline wall. You write down your entry conditions, your risk limit per trade, your max trades per day, your maximum daily loss, your invalidation levels, your stop-loss rules, your target-taking method, your no-trade conditions. This rulebook is NOT guidance. It's NOT suggestion. It's law. Livermore said, a trader must keep their own law, or the market will enforce it on them. Your rulebook is your law. TP2. Use a pre-trade checklist. Before you enter any trade, ask, is this trade in line with my plan? Is the market structure clear or messy? Is this an emotional trade or a logical one? Is my risk small enough to survive being wrong? If this trade fails, will I still feel calm? If you can't answer why yes to all, you do not enter. This eliminates 90% of destructive trades. STEP3. Set hard boundaries with yourself. Tao taught that every trend has limits. You need limits too. Maximum of 2 losing trades before stopping. Maximum of 1 active position if you struggle with multitasking. No trading during emotional days. No adding to losing trades ever. Boundaries create survival. Survival creates longevity. Longevity creates mastery. STEP4. Track every mistake in a disciplined journal. This is the tool that separates amateurs from professionals. Every violation must be written. I moved my stop. I chased the breakout. I increased size after a loss. I entered without confirmation. After 30 days, you will see the truth. You don't lose because your strategy is weak. You lose because your discipline breaks in the same patterns. Awareness is the first cure. STEP5. Introduce a trading cool-down ritual. When your heart rate spikes, when frustration rises, when the loss stings, you step away. Minimum 10 minutes. Livermore said the worst trades happen immediately after emotional impact. Your goal isn't to trade more. Your goal is to trade clear. A calm trader is a dangerous trader. Dangerous because they make decisions without fear. STEP6. End each day with a discipline score. Rate. Rule following. emotional control, patience level, execution quality. Not your profit, your behavior. Because money is a lagging indicator. Discipline is the leading one. STEP7. Keep your trading environment clean of noise. Cancel notifications. Mute social media. Remove distractions. Set a time for analysis and a time for execution. You cannot maintain discipline if your environment shatters it every 5 minutes. STP8. Become the trader who waits. Dow's most profound lesson wasn't about trend direction. It was about character. He taught that markets reward those who have the strength to wait and the courage to act only when the evidence aligns. That is discipline. That is your edge. And that is what separates the trader who survives from the trader who disappears.